if and when the gold price, we're getting some glimmers of hope for gold. How do you see the price setup?
I think the price setup, it's really interesting. It's really been trading in a range for the past 2 years between around $1,700 and $1,800 an ounce, and it bursts through that 1,800 or say 1,850. For example, when Russia invaded Ukraine, then it went down below when there was a lot of dollar strength, and I think there was a lot of shorting in the futures market in gold as a way to play the strong dollar. And so what the market's waiting for is to see whether or not the Fed raises rates, continues to raise rates, and what happens with inflation, or whether the Fed pivots at some point and starts to bring rates down. And I think that we're starting to see the economy start to weaken a little bit. And if we do enter a recession next year, which I think there is a fair likelihood of that happening, a good probability of that happening, then I think that the price of gold will rally. So I think we're actually entering into a pretty good setup for next year.
So people are going to bring up, Chris had that famous call of $10,000 gold. Do you still believe in that number and see it down the line at some point?
Well, I mean, the story on that is yes, I do. That's to answer your in short, I do believe in $10,000 gold eventually, but it's going to take a very long time, and that'll gold will hit 10,000 when the market loses confidence in the Fed's ability to be able to manage inflation in the economy. And when we start to see inflation really, really take hold. So I think that right now what's likely to happen is that the Fed is raising rates now. Inflation is, I think, broad U.S. market CPI has peaked. I think we'll start to see inflation decline. But I think we'll also see a recession. And when we see that recession, the market's going to kind of freak out. The policymakers will freak out, and they'll say we need more QE. We need more stimulus from the Fed, and I think that will happen again. And I think inflation will start to take off again. And so when the market starts to see that this inflation is here to stay, and when the general public, really rich people, start to get scared about what they should do with their cash, that's when gold goes to 10,000.
I like how you said that, and back to QE, and once again,
yeah, exactly.
History repeating itself. Here we are again, folks. But getting back to the miners, because obviously this is your expertise. You travel mines throughout the year. In the past, I know we spoke about how, look, they've done a good job cleaning up their act. I'm comparing to like 5-6 years ago. They've optimized operations. They've generated free cash flow. More and more companies, as you know, paying dividends. But do you think that will continue to be the trend, or do you think there'll be a focus shift from paying dividends to generating growth?
Yeah, I think that the dividends are still going to be key. That's really what investors want to see. They want to see organic growth. We even saw with the Goldfields Yamana deal, which will not be consummated, and was a bad deal. Goldfields chose to get current production rather than try to grow their production base. It's an easier thing to do for big companies. It's less risky. So until the market starts to say we want you to grow, I think that the focus is going to be on cash returns, dividends, and near mine exploration.
Well, that brings me to my next point. Let's talk deals. And as you've pointed out, deals have been, few and far between. Where have they gone? What happened to the deals in this business, Chris?
I think the deals really don't make sense unless it can be accretive to really the acquirer's shareholders. So, for example, the Goldfields Yamana deal, there were no synergies in that deal. One operated on one side of the planet, the other operated on the other side of the planet. And Goldfields is paying a very big premium to Yamana shareholders. I mean, we were big Yamana shareholders, so we were thankful for that. But we were also Goldfields shareholders to a smaller degree, and their stock got hit really hard. So at the end of the day, we were net positive on it, but not as much as we would have liked. And I think what the market's saying is that you need to be able to show that you are that you're accreting your net asset value. The acquiring company needs to be accreting their net asset value if they are doing a deal, and it's hard to show that.
Can you give us some insights as to what you're seeing in terms of new gold deposits popping up? And you've spoken about how much gold really is out there. Can you give us insights? I mean, are we really drying up here, or what's the situation?
I mean, there are some gold deposits out there, but we own, for example, some stocks where the deposit is good, but it probably won't fly at $1,700 an ounce. Could it go at $1,800? Could it go at $1,900? Yeah. So those are lever types of plays. So for example, at this point, we own something called Troilus, which has a deposit in Quebec, which is very big. It's relatively low grade, and we think that they're doing things to make it, which will make it economic at $1,700. But currently, as it currently stands, it's probably not economic at $1,700 an ounce. So there are lots of deposits like that. And there are some also really, really good deposits that we think will fly, like, for example, Osisko Mining's Windfall in Quebec. There's another one that we like a lot called De Grey, which has a deposit in northwestern Australia, which we think will be good. But those are trading at such big discounts that discounts to their net asset values, but they're still big market caps. So like the companies are more incentivized to build those themselves than to sell them at big discounts to their net asset values.
So if I were to ask you to grade the health of the mining industry right now, what would you give it?
Like what's the scale? The scale of like
you could give it an A, a B, a C.
I would say the health is probably like a B.
Okay.
maybe like a B minus.
Where does it need help the most? I guess is what I'm trying to get at.
Yeah. Okay. I mean, what I would say is that it is in this position now where it does need to show that it can sustain itself, that it can sustain production down the road. And so it's a good point. I mean, I do think that they should buy some of these smaller development stage companies and build their mines, build their projects. And, part of the problem with that is that, like I said, they don't want to sell. The development stage companies don't want to sell because they're trading at such big discounts. And they need to do a good job of finding more gold. That's another situation. So they do need to be able to show that they can sustain themselves. But they are returning cash to shareholders, and they are focusing on their operations.